Many people often face challenges in managing their finances, but this should not be a problem when you have the right knowledge. This chapter will discuss different techniques you can use to manage your money. We will also explain the meaning of investing and highlight the steps you can take. In the last part, we discuss different investment options. How to manage your money. You can take different steps to manage your money to avoid issues like overspending. You can track your expenses and make meaningful investments with proper financial management. The following are some steps you can take to manage your finances. Track your spending. To improve your finances, you should track your spending to know where your money is going every month. You can do this by keeping your receipts or recording all your expenditures. You can make your life easy by using a money management app to track spending in different categories in this digital era. This will help you gain insight into the total amount you spend on non-essential things like entertainment and eating out. When you know how your money is wasted, you can make a better plan to improve your finances. Create a monthly budget. Budgeting is one of the most important things that help you manage your money. After tracking all your expenses, you should create a realistic budget to allocate your money toward pertinent things you require in your daily life. However, remember to create a flexible budget that suits your lifestyle and spending habits. Your budget should be realistic, and it is a way of encouraging you to practice better habits in spending your money. However, there is no need to create a strict budget or punish yourself since you are entitled to enjoy the benefits of your hard work. You only need to make sure your budget is flexible and avoid spending the money you don't have. You should prioritize basic things in your budget to avoid straining your financial resources. Save your money. You should learn to build your savings, and you can achieve this by creating an emergency fund you can turn to when you experience an emergency. Don't worry about the money you save per month. Even if it is little, it can make a difference. One day, it will save you from a risky situation that can force you to apply for a loan that usually comes with high interest. At some point in time, getting a loan is inevitable, but you would rather consider other better options first. With general savings, you can strengthen your financial security. Automated savings can help you contribute to the emergence fund without fail. Pay your bills on time. You should always make sure you pay all your bills on time so that you do not ruin your credit history. It might be difficult for you to get a loan to purchase other items you cannot buy using your savings with a poor credit score. Additionally, you also have late fees and high interests when you make timely payments. This can go a long way in helping you save your monthly earnings. You can also save your money by cutting back on recurring charges that you can do away with. For instance, you can cancel all unnecessary subscriptions to streaming services or other mobile apps that you rarely use. Use cash. When you buy consumer products like groceries and other smaller items, it is better to use cash instead of your credit card. You should know about credit card use because it is a short-term loan that should be paid back at the end of the month. A credit card also generates interest that can haunt you for several years, leading to the creation of a debt cycle. However, you can avoid hype buying when you use cash. This method only allows you to use the money you have, unlike when you buy with a credit card. Start investing today. One of the most effective methods to manage your money is to start an investment that will help you generate more income. If you properly manage your finances, you can end up with more money. We will discuss different things you should know about investing your money in the next section. What is an investment? Investing is the process of buying assets or performing any activity that can increase the value of your money in the future, where you can get returns in the form of capital gains or income payments. Even when you are no longer going to work, you can enjoy passive income continuously from your investment. It is all about spending your money and time to improve your welfare in the long run. There are different investment vehicles you can consider, and these are designed to help you earn additional income or a profit from your initial deposit. However, investment comes with risks and losses, so not all investments are profitable. You should know different things before investing your money so you make an informed decision. How to start investing. There are several forms of investment options to consider depending on your long-term goals. Here are some tips that can guide you in your investment journey. Pick an investment strategy. The first thing you should do is to pick a strategy determined by the amount you want to invest and the timeline for your investment. Other investment firms are simple, and you can start with little money. You can also opt out whenever you want, especially when you choose short-term investments. However, other investments require large sums of money, which are long-term. You should also know the amount of risk posed by each type of investment vehicle you choose. Start investing early. If you want to make a long-term investment, it is vital to get started early. When you invest when you are still young, your money will get enough time to grow. Remember, your money will gain interest to choose the ideal timeline that suits your needs. If you invest more money, it means you will get handsome returns at the end of your investment term. For instance, if you make monthly contributions of $200 for 10 years at an average annual interest rate of 6% of your investment, you will get $33,000 at the end of the investment period. Your total contributions would be $22,400, while $9,100 will be your interest. While the market has ups and downs, long-term investment can benefit you more. If you don't invest your money and choose to keep it in your savings account, there is a risk that it can be eroded by inflation. Decide how much you want to invest. Your investment goal should determine the total amount of money you can invest. Suppose retirement is a common goal of an investment. In that case, you must use a retirement calculator to try and figure out the total income you can get from your investment after a particular period. Again, it will be easier if you start your investment plan when you are still active and fully employed. Choose an investment account. You can invest for retirement using the usual 401k or use an individual account such as a traditional or Roth IRA. However, if you have another investment goal different from retirement, you should pick an appropriate account that suits your needs. A taxable brokerage account is a perfect option since it allows you to withdraw your money anytime you need it. Another thing about opening an investment account is that you don't need large sums of money to get one. You can invest as little as $500 and still get an account of your choice. It is vital to do your research first to identify an investment that requires a relatively small amount of money. Understand the fees charged by brokers. To succeed in your investment, make sure you know the minimum deposit required to start your investment. You should also understand how the market operates to avoid losing your money. You should not be tempted to venture into any form of investment you are not familiar with, since this can lead to losses. You must go through customer reviews to gain insight into what other people say about the brokerage before opening an account. The good thing about customer reviews is that they are objective, and you will learn different things from them, like account management fees, minimum deposits, trading fees, and other aspects that can affect your trade. Commission and fees are other essential elements you should know, since they can impact your total earnings. You need to know that brokers make their money from the clients, but check if the commissions charged are reasonable. Every time you trade, your broker will charge a commission for using their platform. While other brokers do not charge a commission, they will recover the money somehow. There is nothing like free lunch or charitable work. Key takeaways to succeed in your investment. If you do your research well, you will likely succeed in your investment. Just make sure you keep the following tips in mind to achieve your goals. Aim for a long-term investment. Investments with better potential rewards come with higher risks and losses. If you are new to investment, you can consider investing in funds, not stocks. You should diversify your investment to reduce the impact of severe losses if one investment fails. You should read widely to understand the market forces that can impact your investment. Different investing options. There are different investment options you can consider. The following are the common types of investment preferred by different people. Invest in stocks. When you invest in stocks, you buy shares in public companies, and you do this in anticipation of earning dividends when the company grows. Your shares will become valuable when the company improves its performance. You can also sell your stocks to other investors, giving you a profit. Stocks are also known as equities, and they can be purchased for thousands of dollars. When you buy stocks, you will be included in the company's profit sharing. When the company performs well, you will also get more revenue depending on the available stocks. It is a good idea to purchase stocks through a mutual fund. You can put your money in an online investment account, and it is used to purchase stocks. Get as much information as possible about the kind of trade you want to undertake so you don't make losses. If you want to invest in stocks, you should first practice trading with market simulators before using real money. This will help you determine if the kind of trade you want to venture into is your perfect fit. Investing through your employer. You can invest part of your salary through your employer's investment plan. You can ask your employer to add you to the scheme if money for your pension contributions is not automatically deducted from your salary. If you invest using your employer's 401k, you will not miss any contribution, and your money will start to accumulate at an early stage. By the time you reach retirement age, you will have a substantial amount of money. Making small contributions over a long period is a great way of adding value to your money, since you can get a lump sum when you finally retire and monthly payments. Bonds. You can also invest in bonds, but this method requires substantial money before you get started. A bond is a special type of loan to a government, company, or municipality, which agrees to pay you back over a certain period. When you choose this investment, you will get your interest first. Bonds are mainly used for large construction projects or other bigger tasks like infrastructural development. The main advantage of bonds is that they are less risky than other options, like stocks that can be unpredictable. With a bond, you know the amount of money you will get and the time you should be paid back. However, bonds don't earn better returns in the long run. Therefore, bonds should constitute a smaller segment of your investment portfolio. You cannot solely rely on bonds since they will not give you enough money to sustain you in the long run. Mutual funds. Mutual funds consist of different forms of investments combined. When you choose to invest in mutual funds, you will skip the hassle of selecting bonds and stocks. Instead, you can buy a collection of investments in one transaction. Mutual funds are diversified, making them less risky compared to other investments like stocks that can be volatile. Professionals often manage mutual funds, but some of them are determined by the performance of a certain market index. This means the index can offer lower fees due to the elimination of professional funds. You should understand the difference between mutual funds and index funds to make an informed decision in your investment. Exchange-traded funds. Exchange-traded funds, EFTs, are perfect for people who are still new to the stock market. The main benefit of this option is that EFTs are cheap, and they come with lower risk compared to individual stocks. The main reason is that a single fund consists of a collection of a variety of investments. If you want to diversify your investment portfolio, you can consider ETFs. Another aspect of EFTs is that they trade throughout the day, and their price is often lower than the requirement for investing in a mutual fund. To sell ETFs, you should have a brokerage account, and all forms of trade would be done online. Most brokerages don't have transaction or inactivity fees, and they have no account minimums. Opening a brokerage account is a simple process, not very different from opening a bank account. If you want someone to handle your investment on your behalf, you should get an account with a robo-advisor. They will build and manage your investment, and you will be charged a relatively low annual fee. However, you need to monitor your account regularly. Commodities. Commodities include different things like precious metals, energy products, and agricultural products. These are usually raw materials used in various industries, and their prices are determined by market demand. For instance, the scarcity of particular agricultural products can lead to an increase in their price. When you invest in commodities, it does not necessarily mean that you will hold them physically. Most investors buy commodities using options and futures contracts or via securities such as ETFs. The other option of investing in commodities is buying shares from the companies that offer them. When you become a shareholder, you will be included in the profit sharing. The danger of investing in commodities is that they come with relatively high risks. Investing in options and futures mainly depends on the money you borrow, which can lead to unprecedented losses if the market for commodities performs below expectations. The other risk of investing in commodities is that their price is determined by several factors beyond the control of many people. However, gold is a good investment since it is viewed as a storage of value. Real estate. Investing in the real estate sector is one of the wisest decisions you can make if you want to enjoy passive income in your entire lifetime. The good thing about investing in properties is that their value appreciates over time, so you are always assured of better returns in whatever type of investment you choose. For instance, you can invest in buying and selling homes or other properties. You can buy a property and sell it later when the price increases. However, you need to upgrade the house first so that it can fetch a high price when you sell it. This will help you generate handsome properties. You can also consider investing in rental properties. These will generate you passive income every month while you relax. The other option that helps you invest in real estate without owning any property is buying shares from a real estate investment trust, REIT. REITs are companies owned by different people, and they specifically use the real estate sector to generate income on behalf of the shareholders. REITs pay higher dividends than other forms of investments. If you want to generate more revenue from your money, it is vital to choose an appropriate investment that will give you passive income in the long run. However, you should be aware of the challenges you will likely face as a new investor. Other forms of investment come with risks and losses, so you should do your homework first to get more details about the minimum deposit required and compared commissions offered by various brokers. When you are happy with the services offered by a specific broker, you can open an account. Remember that investing is a long-term process, not a get-rich-quick scheme. If you consistently invest over time, you will reap huge benefits. You need to stick to one strategy no matter what may occur in the market if you want to get more returns from your investment. Passive income. In today's world, a single source of income is not sufficient to cover the considerable financial burden. With prices soaring, people are looking for alternative means of earning money. However, people with hard schedules question how to put effort into an additional job. This is where passive income comes in. People often misunderstand the concept of passive income and how it works, and therefore miss out on the many benefits it offers. While active income requires that you put in the time to perform a task or service to get paid, passive income requires little to no effort to generate a consistent cash stream. However, it does require some amount of effort or investment at the beginning of the venture. Almost everyone has some sort of active income in place before deciding to invest in passive income. Like any other investment, passive income sources require some level of commitment, but the generated revenue is all worthwhile. Reasons for building a passive income portfolio. Many people don't bother looking into passive income options because they either think it's too much of a hassle or have no motivation to earn passively. However, they are missing out on quite an opportunity, as there are numerous reasons you should consider building a source of passive income. 1. Financial stability. Many people these days live from paycheck to paycheck and do not have the financial stability to live a carefree life. A source of passive income will help achieve financial stability without spending too much time on a job. This way, you will have a financial safety cushion to lean on and will not have to worry about your paycheck to make ends meet. 2. More money at your disposal. When you're earning passively, there's more money at your disposal to be used to further your finances or just used as you'd like. You can put this extra cash towards savings for your car, your house, or other expenses you'd have difficulty paying with your active income. If money ever held you back from following your passion, getting passive income will solve this problem. 3. Independent of a paycheck. When you have more financial freedom, you're free to follow your passions without worrying about your paycheck. If you invest in multiple sources of passive income, the more, the merrier. 4. Location independence. Passive income gives you the freedom to make money from where you'd like. You don't have to be limited to a single location for the rest of your life. In addition to traveling, You can also pick up and move where you've always wanted to when multiple sources of money come in while working remotely. 5. Early retirement. People living paycheck to paycheck often worry about retirement as little to no options are available for them. However, you can start planning for early retirement with passive income coming in. Ways to build passive income. Passive income sources either require an upfront time or monetary investment to bring you profit in the long run. If you're not willing to invest in one of these, you can't expect to get a constant stream of money at a later stage. This doesn't mean that you have to invest a massive amount of money or months of your time, though you can start with as little as $5 and put in some effort to get great results. Listed below are some ideas to build a passive income portfolio. 1. Rental properties. Investing in rental properties is the best way to have a consistent income every month. Rental management companies today make it pretty simple for you to get profits from your rental properties without putting in the time to meet tenants, maintenance staff, etc. While there are a few matters you'd have to give attention to, you also have the option of outsourcing the entire procedure to make this an entirely passive investment. Depending on your goals and interests, there are several ways you can invest in rental properties to create a source of passive income. Some options include: invest in single-family rentals if you want an easy investment with smooth proceedings. You can even use an online platform to find a suitable property and purchase it. If you're looking for a larger-scale rental investment, consider investing in a larger development. The best way to do this is to invest in multifamily or commercial properties. You can either fund real estate loans or buy an equity share in a property. Farm property is your best bet if you're looking for a less volatile real estate investment. Although it doesn't sound as attractive as the other two options, it's still one of the best options when considering a rental investment. 2. Dividend stocks. Stock investment is a tried and tested way to earn passive income and generate the most revenue out of all options. It requires time, money, and effort to research stocks, market trends, stock trading tools, and online brokers. The good part is that they generate large dividend amounts. Over time, these stocks generate revenue and provide you with a nice residual income. Many online brokerages offer stock trading services, various research tools, and other resources. You must do initial research before selecting a brokerage for your stock investing, because this is where you'll be investing a lot of your money. With the huge number of brokers present online, the number of scammers is also high, and therefore you should always research and read reviews before you sign up on a platform to invest. 3. High-yield savings accounts. If you're looking to generate a safe, passive income stream with little to no effort, putting your money in a high-yield savings account is your best option. Many banks provide the option of high interest rates with little to no additional charges. You'll have to do some initial research to find a bank with a suitably high interest rate and need a substantial sum of money to put in said bank account. There's also an alternative to this option where you can put your money in a money market fund. Investment companies manage these, but some banks also provide this option. While bank savings accounts are insured, the same can't be said about these money market funds. 4. Crypto staking. While you're probably aware of crypto trading and how you can earn profits from it, there are chances you haven't heard about crypto staking. Crypto trading is an active income generation technique, whereas crypto staking doesn't require much work and is considered a passive source of income. And, like other investments, this option is associated with some risk. Crypto staking involves delegating your cryptocurrency to someone verifying activity on the underlying blockchain network by compiling records of transactions. These verifiers need to put some crypto tokens at stake to protect against fraud transmissions. If they're successful, you get some share of the rewards. But there's also a risk involved when you put your tokens at stake. Plus, you can't sell or trade your tokens for some duration. 5. Annuities. Annuities can be good options for having a consistent passive income stream, but have some complicated conditions. In essence, they are considered to be an insurance product that you pay for, and in turn, you'll be paid a consistent amount every month for the rest of your life. Doesn't that sound pleasing? But before you get too excited, know that these investments are not suitable for every individual as they require a high initial capital investment. On the other hand, this option is great if you have a zero risk tolerance policy, ensuring zero loss. Therefore, you must consult a financial advisor before you invest in annuities. 6. Real Estate Investment Trust. If you're interested in real estate investments but don't want to deal with the hassle of buying and managing properties yourself, investing in a real estate investment trust, REIT, is the right thing to do. This way, you'll also be able to avoid having to pay the hefty down payment and any maintenance or fixing charges that may pop up. A real estate investment trust is pretty similar to mutual funds, where they purchase and own commercial property, including offices, retail buildings, hotels, and apartments. REITs pay a high dividend amount, but before you decide to invest in REITs, research the technicalities associated with investing in these ventures. 7. Peer-to-peer lending. Peer-to-peer lending involves you lending your money to people who do not get approved for traditional loans. While this option has a considerable amount of risk involved, the interest rates associated with peer-to-peer lending can be somewhat attractive. The good thing about this option is that there are various platforms dedicated to this exact purpose, where you can simply sign up and start investing money without having to worry about payback. These platforms ensure you get paid back with additional interest amounts in ample time. As the lender, you will have the freedom to choose who you lend your money to and the payback time. 8. Create content. Content creation is one of the biggest passive income sources in today's world. Many global businesses are looking for opportunities to create content and get it to their audience. Once you get your audience's attention, you can start cashing out your content by directly selling it, monetizing it, and displaying advertising. This will get you payments for the use of intellectual property that you own the rights to. However, content creation can take up a significant amount of time. But once this time and effort is invested, there's a steady stream of revenue generation for a long while. The attention of your audience. Content creation ideas can include: start a blog, create a YouTube channel, develop an app, design a website, license music, create a course online, sell stock photos, write an ebook. 9. Affiliate or network marketing. Affiliate and network marketing is becoming increasingly common as a side hustle for many people. It helps them get a decent amount of money while not putting in constant effort. However, like many other investments, this option requires you to initially put in effort and keep a watch on it. Affiliate marketing gets you commissions every time a user reaches your sponsor's product page through your content. However, building content and a loyal customer base can take a lot of time. On the other hand, network marketing can provide a better option for earning passive income by creating a downline team. With each of their sales, you get a percentage of their commission. 10. Storage rentals. Storage rentals can get you a decent amount for little to no effort. You need to purchase or rent a property, specifically a warehouse-type property, and put an ad for your storage rental. Now, all you have to do is wait for customers to reach you and ensure they've stored their things inside the rental. This will get you quite an amount, as people often need storage space for the furniture and other things they've accumulated. 11. Pay off debt. If you manage to pay off or even reduce your debt, you will be saving an appreciable amount of your income. And, like other things, this too requires an initial investment. The good thing about paying off debt is that it gives you a good return on investment. For instance, if your credit interest is 10%, paying off your debt would mean you'll get 10% straight back. There are two ways you can go about paying off your debt. These include refinancing or consolidating your debt. For instance, refinancing is better if you're under student loans, whereas credit card debt should be consolidated with a personal loan. You can also try bank transfers or simply pay down your debts. 12. CD ladders. Building CD ladders is a complicated but low-risk investment for a passive revenue opportunity. You can get a higher return on investment if you buy certificates of deposits, CDs, in certain increments from the bank. This is a great option for people who want to avoid risky investments at all costs. 13. Dropshipping. Dropshipping is one of the simplest passive income sources on this list. It's also the most profitable and easy to understand. If you're familiar with the world of dropshipping, it's simply an international business on popular platforms like AliExpress. You can start a dropshipping store, find trending products, and sell them to your international audiences. The best part about dropshipping is that it gives you the flexibility to price your products and control many other aspects of your business. You can use a wholesale marketplace to obtain your products and then sell them to your customers. Although this gets you a reasonable income, it also requires quite a lot of time and effort. So if you're willing to spend some time on your dropshipping business, you have a promising revenue generation opportunity. 14. Use passive income apps. What's more passive than going through your daily routine while getting paid for it? Well, that's exactly what passive income apps are designed for. These apps are usually used for market research and data collection. They track your day-to-day activities and sell this data to interested parties. Don't worry, it doesn't violate your privacy or any private information. All you need to do is install these apps on your phone, register for their rewards, and forget that it exists until you need to get paid. Some apps may give you easy tasks like walking a certain distance every day or exercising. There's nothing better than having the financial freedom to pursue your passions or spending time pursuing your hobbies. However, with the economic strain on most people, this becomes nothing more than a dream. This is why it's important to have more than one source of income, and that too, a passive income. Passive earning gives you all the benefits of a job, but without having to put in a lot of work. However, nothing comes without a price, and getting passive income sources requires some initial investment, whether of your time or money. But once you've established a suitable solution for this, you'll have peace of mind regarding financial constraints. There are many more techniques for earning passive income in addition to the ones listed above. With each technique, there's some capital or time investment required. No one said earning money would be easy, but it can be a little less challenging with passive earning. Insurance. Insurance plays different roles in our lives since it's designed to protect us from unforeseen events. This chapter will explain different types of insurance policies and how they help us together with our loved ones. We will also explain how you can choose the best health plan in detail. What is insurance? An insurance plan refers to a contract between the insurance provider and policyholder in which the latter gets financial protection or compensation for losses from the insurer. A policyholder pays regular premiums to the insurance provider. If you have a policy, your provider will pay you when you encounter an unfortunate incident like an accident, damage to your house, theft, or loss of life. In other words, insurance plans play a critical role in hedging the policyholder against financial losses that may also result from the actions of third parties. Your plan outlines all the terms and conditions under which the insured party benefits from the insurance provider. You can also use insurance to protect your loved ones. When you purchase a plan, the insurance provider risks protecting you, and you pay premiums for the services offered. If an insured party experiences any form of eventuality, they can file a claim with the insurance company. An insurance provider evaluates the claim and settles it if the application meets the criteria for approval of compensation. Benefits of insurance. In most cases, disaster strikes when you have no money, and this is where an insurance policy comes in handy. Insurance policies benefit people and society as a whole in various ways. Along with the obvious benefits of insurance, others are not much discussed or discussed. The main advantages of insurance include the following elements: cover you against uncertainties. In the event of unforeseen events like a sudden illness, property damage, or an accident, you will get coverage from your insurer. The protection you get depends on the type of policy you have. Management of cash flow. When you pay for losses caused by uncertainties out of pocket, your finances are likely to be affected. However, when you have the right policy, your insurer will handle the issue, giving you peace of mind. Provides investment opportunities. When you operate a business, make sure you have an appropriate plan. If you want to attract investors, they first check if you have business insurance. If you have no policy, no investor may be willing to risk their money by joining hands with you in business. Each plan is designed to suit the needs of different people, so you should know what you want. Types of insurance. Insurance covers anything, and numerous types of policies are designed to suit different people. No one expects misfortune, but it happens unexpectedly. No single insurance policy can cover everything in your life. Therefore, you will need different types of insurance coverage to prevent financial hardships. Here are the common types of policies you can consider getting protection from different things. Health insurance. Health insurance is one of the most critical policies that everyone should have. A sudden medical event can cause serious financial hardships, especially if you pay for your treatment out of pocket. The costs are usually so high that other individuals choose to declare bankruptcy when they realize they cannot cover their medical bills. Medical costs for different treatments are usually very high, and most people without health insurance cannot meet them. However, if you have a health plan, you will get coverage for medical bills, prescription drugs, and physician costs. Your insurer will pay part of the costs, and you should meet your deductible and other out-of-pocket costs. Your policy can make your life easier since it might be difficult to meet your healthcare needs using your savings. Life insurance. A life insurance policy is designed to ensure that your loved ones can live a comfortable life when you are gone. When the breadwinner dies, the designated beneficiaries covered by your life insurance policy will get coverage for loss of financial income. There are different types of life insurance policies, so you should choose something that suits your family's needs. The following are examples of life insurance plans available. Term life insurance. This kind of policy has a specific end date, and you can use it to cover a specific situation. Whole life insurance. This plan provides coverage for your entire life, and premiums will remain the same. Universal life insurance. Offers lifelong coverage, but it is generally cheaper. Variable life insurance. Provides permanent coverage together with cash value. You can choose the subaccount to invest in, and they determine the cash value you will get. Burial and funeral insurance. Mainly covers the final expenses to give the insured person a dignified send-off. If you are in poor health and you don't have another policy, you can consider this plan. You will not leave a burden on your loved ones to look for money to meet your burial and funeral expenses. Survivorship life insurance. The plan ties two people under one plan, and it usually applies to wife and husband. The beneficiaries can get a payout when both holders of the plan are dead. However, you should know the pros and cons of the policy before you get it. Mortgage life insurance. This policy covers the balance on your mortgage when you die. It is designed to protect your family so they will not face challenges in paying the loan. However, the policy does not offer financial flexibility to your loved ones. Credit life insurance. This policy also covers specific debts, and it protects your loved ones if you don't want them to inherit your credits. Supplemental life insurance. Covers a group of people and is inexpensive. However, you cannot own it as an individual, which means you lose it once you lose your job. Homeowners and renters insurance. When you own a property, you must have homeowners insurance designed to protect your physical structure and valuable possessions against damages that different factors can cause. For example, natural disasters like floods, earthquakes, or thunderstorms can leave a trail of destruction to your property. Other aspects like theft or fire outbreaks can lead to damage and loss of property. Depending on the type of insurance you have, your insurer can pay for partial damage or cover the repairs for the entire house. Your plan can also cover the damaged possessions in your home. If you are forced to look for an alternative accommodation while the house is being repaired, your insurance will cover the expenses. Renter's insurance helps protect the renter's possessions from damage or other aspects like theft. However, you should know that anything can happen at your place, such as unprecedented injuries. If a tenant or a visitor is injured at your property, you will be liable for the damages. To protect yourself from lawsuits and medical expenses that may arise from the injury, make sure your homeowner's policy comes with liability insurance. The main purpose of liability insurance is to cover accidents that may happen at your house. When a guest slips and falls on the stairs in your home, you may be found liable for the injury, and you will be responsible for paying medical expenses. When you have liability coverage, you can mitigate the costs. Liability insurance also provides coverage to homeowners who may be implicated in accidents outside their home. For instance, if your dog escapes the yard and it bites someone, Your liability insurance will cover the damages. Disability insurance. No one wants to be involved in serious accidents that can lead to permanent injuries or disability. However, such incidents are inevitable in some instances. If you work for a corporation dealing with heavy and often dangerous equipment, make sure you get disability insurance. When you suffer an injury that alters your life, disability insurance will replace your salary if you are incapacitated. Most employers provide this kind of policy to their employees to protect them. It is essential to understand what your disability insurance covers. Other injuries can be life-changing, so disability insurance can go a long way in protecting your interests. Other policies can also pay you during the days you cannot perform your normal work due to the injuries. If the policy is silent about what happens when you suffer a permanent policy, it may give you challenges in the future. Make sure you understand the contents of every policy you get to avoid problems. Automobile insurance. If you own a car, you must have auto insurance to protect your car and yourself in the event of an accident. This type of insurance offers coverage for property damage and injuries. When you are involved in an accident, your policy will cover your medical expenses and repairs to your vehicle. If you are found liable for causing an accident that has led to someone's injuries and property damage, you should meet the medical expenses involved. You can get relief if you have auto insurance that provides third-party coverage. It is illegal to drive without automobile insurance in most states since it helps protect all road users. Millions of people are involved in an accident every year, and the highest number of insurance claims for auto accidents in different states. As a general rule, everyone involved in an accident should seek medical attention immediately since other injuries manifest later. Even lighter accidents like stationary collisions will need repairs. If you are at fault, your auto insurance will pay for the repairs of the other party's vehicle. Therefore, the significance of this kind of policy should not be overlooked. Long-term care insurance. If you feel you need to visit nursing homes on either a short-term or long-term basis, you should consider getting a long-term care policy. If you do not have reliable people to look after you, you need this plan. It gives your loved ones peace of mind since you will not expose them to the immense pressure of looking after you. However, you should know that long-term insurance is expensive since it is concerned about providing specialty services. These come with a high price tag, so you need to consider other alternative options. Business insurance. When you operate a business, make sure you get the right policy to protect it against unforeseen events that can lead to financial losses and property damage. Your company can experience natural disasters or other elements like theft, which lead to loss of property. There are different types of business insurance available, so you must do your homework to get a plan that suits the needs of your venture. Accidents and other issues can cause injuries in the workplace. Your business should be protected against all forms of mishaps that can lead to lawsuits or financial loss. Try to establish your needs and look for a policy that gives you enough coverage in your operations. Other forms of insurance. Insurance can cover anything you want, and insurers are ready to provide different services to their clients. Apart from the popular insurance policies highlighted above, other plans are designed to cover specific needs like medical malpractice and professional liability. With errors and omissions insurance, you can get protection against lawsuits that may arise due to errors in your operations. Medical practitioners are trained to provide quality service to their clients, but mistakes sometimes happen. This is where you need professional insurance. When you visit different places across the globe, you might need travel insurance. Its main purpose is to protect you against issues like delayed or canceled flights, loss of property, injuries, and other mishaps you may encounter on your trip. Get the right travel policy to enjoy peace of mind when you are thousands of miles away from home. How to choose health insurance. When choosing an insurance plan, you should understand how it works and suits your needs. There are different types of health policies available, and their differences are marked by mainly 3 factors explained below. Premium. When you choose a policy, you should consider its price or premium, paid every month. Your creditworthiness or level of income determines the premium. The insurance provider will check your income to see if you qualify for a particular health policy. The insurance company may also be interested in knowing your credit history to see if you can afford to pay your premiums. Many people use company-provided policies, and these are not complicated. However, if you don't have a work-related health insurance plan, make sure you get something you can afford. Coverage. Some policies are designed to cover basic healthcare conditions at fair prices. The policy limit also determines the premium. If your policy has a higher limit, you will likely pay higher premiums. The other aspect that can determine the type of policy you can get relates to any special condition you have. For instance, if you have an underlying chronic condition, it means you will need regular medical checkups. This means your premiums will be slightly higher than other comparable policies. It is essential to check if the policy you want to get covers your condition. It is a good idea to consult your physician to make an informed decision. Deductible. The deductible refers to the money you should pay out of pocket to get treatment before the insurance company pays for your claim. Deductibles help deter people from making unnecessary claims that are usually small and insignificant. If your insurance claim comes with a high premium, you will pay lower deductibles. However, if the policy has high deductibles, it is cheaper. When you make higher out-of-pocket expenses, you will likely make fewer claims. Insurance plays a critical role in our lives since it protects us from unforeseen eventualities that can cause severe financial consequences. It is vital to protect yourself and your family against financial setbacks that can compromise your future. There are different types of policies available, so you should do your homework and get something that suits your needs. Should know its coverage, deductibles, and premiums when you choose a policy. It is a good idea to purchase the ideal policy for your family and make sure you can afford the monthly payments.